We also know that Gap will be reporting earnings as well. So the retailer's earnings parade continues. And Charlie mentioned Kohl's. Kohl's shares are up 16% on better than expected results. When I say better, it just means compared to estimates, because the numbers are still going in the wrong direction here. We're still looking at a loss for the bottom line, and comparable sales continue to be in the negative range. Mary Ross Gilbert is our senior equity analyst covering retail and joins us now with more, especially let's start with Kohl's, because I mentioned comparable sales down 1.1%. Analysts were looking for a drop of 1.7%. What is Kohl's doing differently to stem the tide?
Yeah, Scarlett. So what Kohl's is doing is they've really ramped up their private brands. Those are the opening price point items, and these are the things that their core low-income consumer really wants. And so they're seeing success in women's, particularly with their So Juniors line. So that's their own proprietary brand, So, S-O. And that was up 10% in the quarter. The overall proprietary brands was up 6%. But remember that they're also cycling a period in which private brands was previously de-emphasized. And so with the current CEO, Michael Bender, when he came on board, that was the first thing he did, was ramp up private brands. And that's the reason why you're starting to see sales lift there. But Scarlett, you raised a valid point. Sales were still down. They were down 1.1%. They were cycling 4 years of stacked declines. Really 3 if you exclude 2021, when they were really benefiting from that sort of post-COVID lift. So, sales are not in the right direction yet. Could they get there by the fourth quarter? Maybe. All of the initiatives that they're doing with these deal bars, these are items that are priced at like $4.99, $5.99, and everything is under $10. Same with the toy towers that they have. And then also they have impulse items. And so all of those little things add to the basket, and that's helping to minimize the declines in sales. But again, they're cycling 4 years of stacked declines going forward, so that makes for an easy comparison. And when we look at the data, we're seeing that the second quarter is tracking in line to slightly better than consensus estimates for a 1% sales decline in the second quarter.
How much of this is kind of the market they're in, the segment they're in, versus their own execution?
Well, actually, Paul, so it's their own execution. And so the current CEO, and he's like the fourth that they've had in the last probably 4 years, it seems like he's making the most progress. But again, we are coming from a long period of sales declines. But these little initiatives seem to make sense. They're doing a better job with planning and allocation. So their spring seasonal merchandise was up in the quarter. So that was encouraging. And they learned that because they sort of missed sales in the fall last year. The other thing is they've right-sided their promotional activity. They missed out on that during the crucial holiday period. So now they've really ramped that up, because let's face it, in the first quarter, there was a $2.6 billion gain just in off-price sales, just from the big three. So they're continuing to lose share to the big three in off-price. We just had Burlington's numbers out today. Their comparable sales were up 6%.
Yeah, and then let's not even get into the TJXs of the world, which are kind of in their own category. I want to get your take on a more traditional retailer, kind of a legacy retailer, and that's Gap. Gap will be reporting results as well. It's got a number of different brands: Old Navy, Banana Republic, and of course I guess they call it just the blue brand, Gap overall. I think about Gap and how it's really picked up a lot of cachet of late. There was a collaboration with, I think, Victoria Beckham, was it?
Absolutely.
Yeah, and things like that get people's attention. I don't know if it's translating into sales, though. Is it?
Oh, it absolutely is translating into sales. When you look at their comparable sales gains, they've been higher than that of Old Navy. Old Navy is their largest brand. It's about 56% of revenues. Gap is the next largest brand, and that's almost 30%, somewhere around there. And so, no, they've been experiencing very strong comp gains there. I think what they're looking for in the quarter is somewhere around that 3 to 4% for the Gap brand. So you're right, you're seeing some strength, and I think that these collaborations, the campaigns all create a wonderful halo. And when you speak to millennials and Gen Z, you will hear them talk about Gap. So, in fact, I'm wearing a collab from last year. This is Gap X Malbon. It's a favorite golf brand, and I really like it. And so I hope they come out with another one. That one, and then Doan. I also like the Doan collab as well. So
it does work.
It does work.
So what are your companies, Mary, what are they saying just about the consumer in general these days?
Paul, what we're finding out is that the consumer, even at the very low end, is really proving resilient. So, in fact, that was something that Burlington noted, that they haven't seen any signs of weakness. And of course, in the off-price, their customer base, most of their customers are really at the very low end. They go paycheck to paycheck. And Kohl's is sort of similarly positioned in terms of their core customer. So same sort of thing, except it's hard with Kohl's because there's other issues going on in terms of execution. But generally, with all the retailers that have reported so far, we're not seeing any pushback or signs of hesitancy on the consumer part in spending. So I still think that if there's some fresh newness or something that's exciting and they have to have it, maybe they might pass up on buying a favorite food brand in the grocery store or cut back there. But if there's something that really makes them happy, I think they're going to make that discretionary purchase, particularly since really with a low unemployment rate, when you have a job, you feel pretty good.
All right, Mary, thank you so much. Really appreciate that. Mary Ross Gilbert, Senior Equity Analyst, covering all the retail stuff for Bloomberg Intelligence. She's based out there in Los Angeles.